Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME, which closed on Friday, April 11th at a price of $26.40, being up about 5.5% on the day. And I think that this is a really significant close for us, a really significant week. And I have to say, I'm really excited to be diving into the chart, going over some data with you guys. And I think that this should be a really helpful video, very useful, and I'd encourage watching all of it. I am going to be going over the chart as well as some data from posts on X and data from Unusual Whales. And so, yeah, I mean, you guys could probably tell I'm really, really excited about this. I've been wanting to do this video for the past couple days, but I've been busy with work and I wanted to have the weekly data here for us to be going over. But before I get into the nitty gritty of this, just looking at the chart here, we are looking at the daily time frame. I do have three moving averages up there, one in pink being the 21-day, then in yellow the 50-day, and in blue is the 200-day. And what you might notice is that we are above all of them currently, and we have recently been above all of them, but kind of, haven't listed the name of the video yet, but I think it's going to be fake outs, shakeouts, and breakouts with GameStop. And, right here, what we saw on March 26th, I think that was a fake out break above these levels. We did quickly move back below them, but now what we're seeing, I think this is the breakout, and that we might be seeing a retest before we do continue higher. And I do think some of these levels to the downside that we were recently testing, they might have been kind of the shakeout. So I'll go over that with some lines that I've drawn up on the chart in a minute. But I did want to point out, why did we get rejected here? So this was on, like I said, March 26th. We did very quickly gap down below that level, closing the day on the 27th at a price of $22.09. And, what's the significance of that versus what we saw here? So on, let's see, the 26th, that was in the middle of the week when we closed above those levels. Whereas over here, we've seen multiple closes the past week above all of those moving averages, and we closed the week above them. So I think that is pretty significant. We also put in the highest close over the past week, above the prior high, which was on the 10th, which was at a price of $26.20. So, I think that just looks super good. A lot of strength getting into that gap that was formed over here. And if I do switch this over to the weekly time frame, ignore the moving averages because those are, now on the weekly time frame. But what we can see when we did move up higher than we are currently at, we closed the week in, a fairly bearish pattern, I would say. Big wick to the upside, close in the bottom portion of the trading for that week. So that didn't look too good. But now what we're starting to do is reclaim those levels, closing the week higher and closing the week above those moving averages, all of them. So I think that just looks excellent. Really excited about that. There is some more stuff I will dive into on the charts here, but I did want to switch over to some of the data here from Unusual Whales. This is just showing the net call and put premium over the past 7 days. And what I wanted to point out with this over here is that we have been seeing increases in the net call premium, which is the green lines on these charts. And so we can see that net call premium has gone up. Let's see, going back really the past 6 days on April 4th, we can see that net call premium increased by 4.1 million. Then again on April 9th, increased by 3.94 million. Then on the 10th, so on Thursday, an increase in net call premium of 3.61 million. And then on Friday, net call premium increased by $5.31 million. So all of that's looking really good, increasing net call premium by millions of dollars, whereas with net put premium, that has been relatively flat compared to the net call premium, as the price in yellow has been going up, and volume corresponding with that call premium has been going up. That suggests buying of calls, not selling. So that is good. People are going long. And then also, with Friday having just ended on the 11th, Max Payne was $23.50. And we closed well above that. So I think that we could be in gamma squeeze or gamma ramp territory over the next couple weeks, maybe next couple months. I think that GameStop could be really moving to the upside, especially because if we look at the following Max Paynes, the highest one that we see is actually for May 30th. We have a Max Payne of $25. All other Max Paynes are lower than that, and even considering that highest Max Payne, we are notably above that level. And so I do expect that all of these Max Paynes will be increasing as time goes on. And if you're curious what Max Payne is, that is effectively the maximum pain that would be caused to retailers who have bought calls or puts, so options contracts. So the maximum number of puts, and which is going short, and calls, which is going long, the maximum number of those would be closing worthless, closing out of the money. And so we can see that because we're above Max Payne, this is in the favor of the bulls. And if we do continue to close above Max Payne, that means that all of these contracts, which represent 100 shares for every single contract, they're closing in the money. People may be exercising those contracts, which would suggest, which would indicate that they are buying 100 shares. They're converting that contract that closed in the money above this strike here, above Max Payne. Or I should say, any contract that was at a strike of $26, they closed in the money. And so those contracts could be getting exercised, and then market makers would have to be providing 100 shares per contract to anybody exercising, and that could trigger what would be a gamma squeeze or a gamma ramp. So this is just looking really good for the weeks and months ahead. And also, I should note that next Max Payne, next expiration is Thursday, the 17th, because Good Friday is on the 18th. And I do believe that there has been some nice moves with GameStop, other meme stocks in the past associated with shorter weeks. This is also the monthly contract expiration for April. So, I think that we could be seeing, a lot of really exciting moves to the upside with GameStop, along with other meme stocks, maybe Bitcoin and other altcoins. Yeah, a lot of sympathy plays here. So I just think this looks really good. And some of the contracts that I will go over at the end of the video are going to be these that Unusual Whales was alerting, as well as others on X. These are the $31, $32, $33 calls for the May 16th expiration. So that's next month's, I believe that's the monthly expiration, but it might not be. I'm not exactly sure. But I believe that has to be the monthly for May. And so we'll look at those at the end of this video. And another account that has been really useful to follow is the Bronx Viking. He does post these fun little gifs of Shrek looking bullish to indicate that he's getting bullish. A little bit cryptic, but usually he's referring to either GameStop or Unity Software. And here you can clearly see that he's talking about GameStop. I love you 5,000. And this is referring to 5,000 blocks of contracts that have been picked up that are very similar to Roaring Kitty from last year, or things that were speculated to be associated with Roaring Kitty. And he just put out a really nice video on GameStop, wondering if this is Roaring Kitty coming back. So I did post this to the channel's page. So if you go to the DGen Ed channel, go to posts, you can just scroll down and find that video that I posted there. I strongly encourage watching that video. A lot of great information there, diving into unusual whales data. And so, yeah, I would definitely encourage checking that out. And since he is referring to Roaring Kitty potentially coming back, I did want to note his last YOLO update was from June 13th of last year, about 10 months ago. And so maybe he's coming back. But, he has not updated this, so I imagine he is still holding at least 9,001,000 shares. And noting that his average price is, or was, at $23.41, which we were recently testing. We were recently below that level. So I think that was some very nice dip buying opportunities. But I did want to now draw your attention to this post, or this repost really, from Ryan Rigg, Wolf of My Street. And this is remembering some posts that he had from May of last year, May 2nd of 2024, when he, as well as the Bronx Viking and others, including Unusual Whales, were talking about these large buy orders that seemed like they could be associated with Roaring Kitty. So I wanted to go back in time, look at May 2nd, see what the price action was going on back there. And then we can kind of project that into the future to see what we might be expecting. So let's go back over to the chart to look at, let's see, May 2nd of last year. And so I believe that would have been right here. I'm just going to move this over so we don't have the big candle over there, distorting the y-axis. So what we could see on May 2nd, a little less than a year ago, GameStop closed at a price of $12.76, right at that 50-day moving average there in yellow. And then the following day, and I should note though, on that day, that he's remembering this post, GameStop went up 16.96% on that day. That was May 2nd. And then on the 3rd, which I believe was a Friday, GameStop went up notably 29.08%, closing above that 200-day moving average, closing at a price of $16.47. And so following that, what did we see? What might we have to look forward to? And so what we could see is a little bit of consolidation here, kind of being a little bit boring. And following that, we did see this nice dip. So we came down to a low on May 6th, so that would have been Monday, I believe, a low of 1362. And so from this, following this move over here, which doesn't really seem very big relative to this, but if we do look at this, this was a pretty nice move followed by a retracement. And so from this low, just going to zoom into the chart here, let's draw a Fibonacci retracement. Some other drawings that I have are probably going to pop up. I guess it's just this red line down here, but let's draw a Fibonacci retracement to see where we pulled back to. That might suggest a dip buying level that we could be looking forward to in, maybe on Monday in the coming days and or weeks. So I'm just going to draw Fibonacci retracement here from that low of $10.70 up to the high of 1745 hit on May 3rd. And what we can see, a couple of Fibonacci levels here, the 236 and the 382. I don't think those are really that useful, so I am just going to adjust those levels. Let's look at the 50% level there. And that was at a price of 1407. We did pierce that on that Monday following these big moves ups. So 50% retracement, that was a good dip buying level. Was the 618 hit? That was not hit. So I think that would have been getting a little too greedy. And that was at a price of $13.28. So let's look to see if we did pull back to that 618 at any point in time before the big move up. And it doesn't look like we did. So that 50% retracement to 1407 was an excellent dip buy. And so maybe we see something like that on Monday moving forward into the future before maybe we get a big move to the upside here, hitting a high during market hours on May 14th of $64.83. But I believe the pre-market high was around $80 a share, which will be important later in the video. But yeah, I mean, price did go up to around $80. So pretty cool there. And one thing I did want to point out with the moving averages that we have here, we can see that following these big moves to the upside, we had the moving averages lined up, going from pink, yellow to red, 21, 50 to 200-day moving averages. So they were kind of in this rainbow pattern. And so that is what we saw before we saw this big breakout, the squeeze on May 14th. So now let's look at some of the levels that I have drawn up here on the chart. I have gone over all of these for the most part in prior videos, but I did want to just kind of reassess them. And actually, I'm just going to fast forward here to the future, and so we can look at some of them. All right, and so the first thing that I should probably note is, let's see, Roaring Kitty's average here at 2341. That is the green dashed line. And we can see that we are well above that. We did get some very nice dip buying opportunities below that level at $20.73, which was hit on March 31st. And we also got some other tests of these levels that I do have outlined here. So I think that we've seen some very recent nice dip buying opportunities. Also, this white line that I have here, it is a Fibonacci retracement, the 786, at a price of $21.69, having a little bit of fun with that number, 69. Also, that just being a technical level, being a coincidence there. Gotta pay attention to that. And yeah, so that 786 retracement corresponds with this massive move that we saw. So going from the low of 995 hit on April 16th up to that market hours high hit on May 14th, we get the 786 retracement to 2169. And so we have broken below that multiple times in the past over here. I might remove those moving averages so it's not so cluttered. But yeah, we have broken below it multiple times, and we have pulled back to that level very recently. So I think that was a dip buying level. And as far as all of these levels, I mean, we did hit a low of 1873 on August 5th of 2024 when markets gapped down. That was kind of a crazy day in the market. I think that was the carry trade or something like that. I'm not exactly sure. But yeah, a lot of panic across the board in the markets. August 5th hitting a low of 1873. That was, an excellent dip buying opportunity. However, there was some opportunity cost in that, considering that a lot of time has passed and we were recently just a couple dollars above that level. And actually, was that exactly a couple of dollars above that level when we hit that low of 2073. This low over here was at 1873. Although, we did have a very nice move, about 80%, 82.69%. Crazy that 69 always pops up. I don't know what it is. Maybe I just manifest it because I'm obsessed with that number. I don't know. So that was, a good swing, but I think that we have the potential for much greater than 80% move to the upside, as you might be able to tell from this Fibonacci extension that I have drawn up here. But speaking of kind of dip buying levels and stuff like that, I did have, I'm not sure if I drew this during a stream or during a video. I believe it was during a stream, just kind of casually talking about GameStop. I drew this yellow box here talking about, maybe we return to Roaring Kitty's level, which would also correspond with, if we broke below it, that would also correspond with that 786 and this purple uptrend that I have drawn here. And that is based on the lows that we hit following the big move up in May. And so on May 24th, we hit a low of 1770. And that's the beginning of that uptrend. And then on August 5th, that is the other pivot point. So those two important pivot points, those two lows, did act as support as we started to consolidate below the 786, started to break out from this downtrend that I have here based on the high from July 17th and the high from September 9th. We did break out from that over here, but we did kind of get caught up in this red uptrend that I have drawn here, which is based on, let's see, the low from over here. So it's not the low of 995. It's a little bit higher than that. It looks like that was the low of 1001. That was hit on April 23rd. And then the other pivot point is going to be from August 5th, of course. And so from that uptrend, we did break below it here, but we did get caught up in it. That acted as resistance. So I have it as a red line that I actually might make a little bit thicker because I think that might be, a profit level, take profit level, or, if you're just buy and hold, good to note that might be acting as resistance. And while we were trading above that level, we did put in a double top here. So on December 26th, we hit a high of 34.37. And then just a couple weeks later, on January 7th, we hit a high of 34.40. So being, let's see, is that 13 cents higher than that? No, 3 cents higher than that. Putting in some wicks to the upside, double top there, and also getting to that higher high. We saw a lower high in the RSI, so that's bearish divergence. And then we also saw a lower volume traded on that day. So that was a pretty clear topping signal following, a pretty big retracement that we saw. And so from the highs there down to the lows, that was a retracement of about 40%. And so if you're a buy and hold trader or investor, you don't want to sell any, that's totally cool. But, if one would have offloaded some shares up there, could have bought them back at a 40% discount. Or, if we just came back to Roaring Kitty's level, maybe we didn't sell the exact high, that would have been like a 30% discount. So who doesn't like a sale? We recently saw that. And so, while I don't expect people to want to sell, I am going to talk about some levels that might be good levels to consider for trimming or selling, however you want to do it, taking some risk off the table. And we did recently see one of those levels over here, which was at $28.90. So that was, I believe, the closing price. The high from this day, which was February 14th, so Valentine's Day, the high on that day was $28.90, not the closing price. The open price, the top of that candle, was at, let's see, $28.90, where I have that yellow line, and we got rejected from it recently. So when we pierced that, that would have been a great level to either trim or sell to then buy back lower. And so let's see, from that level, going back to Roaring Kitty's average, that's about a 19% sale, or, more than 22%. We did dip down to a low of about over 25% discount. And so, who doesn't like sales? We've seen them. And, while I do think that price will be going above $28.90, I do think it will be going above $34.40 in the coming months. still, could have bought back those shares cheaper, get the average down. So I think it's good to kind of be considering that. And I do have this level marked in yellow because it's kind of like a caution level that maybe we do see it as resistance again, but I think it would probably be acting as short-term resistance, as I could see us getting up to, 36 or so in the coming months. So I'll talk about that in a second, but there is one level to the downside I forgot to mention, and I don't think that we're ever going to be testing it. In all honesty, that is at $17.46. And so just zooming in over here, that was where we closed at on May 10th of 2024. We closed at a price of $17.46, and so that is a gap that I suspect we will never fill. We got to a low on May 24th. I have mentioned this. We did get to a low of $17.70, so nearly filling that gap. And so I find that to be really interesting because I imagine there was probably a lot of retail traders who perhaps had noticed that gap at 1746, and they were probably being pretty stubborn, saying, hey, we're pretty close to the fill in that gap, but I'm going to wait for it at least, 1750 psychological level, $17, 2/4. Wait for that to get filled. But then they get left behind. And then if we look forward into the future, we're now $9 above that gap. And I don't think that we're going back to it. So I think that is something I just wanted to point out. I think that's really cool, just the psychology around that gap there being, a little bit of a lure for retail traders to want to buy in there. And then they get left behind only to FOMO back in when price gets up to this gap up here at 48.75. I just think that's a really interesting psychological way to think about this. The markets are always trying to take advantage of us, our emotions, psychology, all of that. So, I think that's really neat. And so let's see, let's look at the chart up here and talk about where this could be going in the weeks to months ahead. And I might just throw up the moving averages here because we have broken above them. And so I think that we could see a retest of these two moving averages, so the 50 and 200 day. So that is, let's see, the yellow and blue right there. And so that's around 2458 to 2482. I think that we could most definitely be seeing a retest of those levels. So I would look for that as a dip buying opportunity. But we also do have the 21-day moving average around 23.89. That could be another dip buying opportunity. And of course, Roaring Kitty's average at 23.41. But just like I did before, referring to Ryan Rigg, the Wolf of My Streets post, from May 2nd, we did get a retracement. So let's draw a retracement up here following, let's see, before I get ahead of myself drawing that. So following this big pullback that we saw, let's draw a retracement from this low of 2073 to the high that we saw on Friday. And so I think that could be suggesting a dip buy level. So from that low of 2073 to the high from yesterday, I'm just going to make sure these levels are marked exactly to the penny. So got the low of 2073 marked there, and then the high from Friday was 26.44. So I'm just going to adjust that there to the penny. And we can see the 50% and the 618, which we didn't retrace to both of those levels following May 2nd of last year. So we did retrace to the 50%. That's at 23.59. That would correspond with breaking below all of these moving averages. So that could be kind of, like the shakeout that we're getting back below them. People start to lose confidence. And so 23.59, that could be a really nice dip buying level. 23.41, that could be even better. And I suspect we might be retesting that again. But what I would caution, based on what happened last year, I would caution being greedy, waiting for 23 or like 22.91, which is the 618, because last year the 618 wasn't tested. We got close to it, but we didn't hit it. We didn't pierce it. And so, yeah, I mean, 23.41, 23.59, maybe 23.69, have some fun with it. Those could be some nice dip buying levels. And so another thing I wanted to talk about, I haven't really talked about it, shakeout to the downside. But when we did come down to these lows over here in March 12th, hit this low on March 13th, a low of 21.56. We were testing that 786 retracement here at 21.69. We pierced it, and we were testing that purple uptrend. We did break below Roaring Kitty's average, but then we bounced. We got this really nice big move. And so perhaps some were posting stop losses at the low that we hit on March 13th, which was at 21.56. And so if anybody did have a stop loss there around 21.50, let's just round it out, right around where the cursor is, if there was a stop loss there, they got shook out. Those lows got swept, and those people got pushed out of their positions. So, I think that's just another game that the market makers, that, stock market does play with us, is, just trying to shake us out of our positions, coming back to below Roaring Kitty's averages, test these levels, and then, a fake out below them, and then a shakeout over here. And so I think that the lows are in, really, and that the next dip buying opportunities that we could be seeing would be to, let's say sub 24, but not sub 23. And so I think that's kind of the plan that I have, or what I expect to see in the coming days. But then into the coming weeks, where do I see price going? I could see it going above 28.90. I could see it getting into the 30s, and I could see it getting above these double top highs that I was just talking about, above 34. I do have this 100% Fibonacci extension drawn up here. Just going to remove those moving averages now. And so that 100% Fibonacci extension is based on the low that we hit on August 5th, going up to the high that we hit on January 7th, and then coming back to that low that we recently hit on March 31st at $20.73. And so if you're curious how you get these 100% Fibonacci extensions, I'll just give you a quick overview of it. It's effectively a measured move. So what you can do is take that low from August 5th, draw that up to the double top high, and then if we take that, measurement that we have over there, and then kind of transpose it over to the low that we recently hit, that is how you get the move up to that 100% move. It's the exact same distance from this low to this high, then going over from this low up to this high here is that 100% extension. And so that is at $36.40. So maybe we get rejected there. Maybe we see some resistance there. So I would keep an eye out for that. And then also moving above it, we do have that red uptrend that had acted as, resistance that we consolidated along for quite some time over here. We do have that above us. And then the 1618 extension is at a price of around 46.08. And that does intersect, as you can see here, with that red uptrend. So that we might find some resistance around there. And we also have this gap to the upside that was based on the closing price from, May 14th of last year, when we had gapped up We closed at a price of 48.75. So there is that gap there. So there's kind of a confluence of levels there. So I suspect we could be seeing some resistance there. But considering that we saw a move up to, 64.83 during market hours, around 80.03, I believe, maybe 80.01 during the pre-market, and that was based on a floor of around $10. Now we're looking at a floor of around 20. So I think that we could definitely be seeing price get up to 46, 48. I think that we could definitely be seeing price go up to 80, possibly, I suspect likely getting into the triple digits. But I think that would be short-lived like over here. So if you're expecting price to get up into the triple digits, I think it's really important to have an exit strategy, have an exit plan, because what I suspect will happen is we'll get another big move up to those levels and then a quick drawback, a retracement. But on this time around, I think that we could find these levels actually acting as support. So if one is looking at, let's say, 40 or 46, 48, maybe 50, as a trim level or as an exit level, I think what might happen is price may go up a lot higher than that. And then you'll look in the mirror and you'll say to yourself, dang it, why did I sell at 50 when price is at 100? And then you'll FOMO in at 100. And then price will pull back to 50. And then you'll have taken a good trade, going from 26, basically doubling up to 50, taking some profits, but then you'll FOMO in, buying a blow-off top for it to then only return back to 50 where you had initially sold. And so I'm saying a hypothetical you, I'm looking at the mirror in myself, I think that we will be blowing past 50 in the coming months. And then I think that will be converted into support. Maybe 40 is support because then, it's a psychological game. Going up to 50, selling, going up to 100, FOMOing in, thinking it's going to go to 200. It pulls back to 50. And then maybe over the course of a year, it trades down to 40. You're in the red, filled with regret. And so I think that these levels, basically like the people who are waiting for this gap to be filled at 1746, they will realize that they're getting left behind when this gap gets filled and it starts to go up higher. Then they FOMO in, then people FOMO in at 60, 70, 80, 100, whatever it is. Maybe it goes a little bit higher, but then they get rugged and then they're filled with regret. And then the whole process repeats. And so that's kind of what I think could be happening over the coming months, just based on the chart. But now let's look over at some options data. And I did want to pull up, before I dive into some stuff, this post from Bronx Viking, which is based on GameStop bull call spreads into the close, go burr. And so for me, I don't really know what a bull call spread is. So I could click on this to look at, the justification for that. But he actually did post this follow-up, I believe, just from Grok, going over what is a bull call spread. And so, a bull call spread is another term for a call debit spread. To be honest, I don't know what that means. It's an options strategy where you buy a call option at a lower strike price and sell a call option at a higher strike price, both with the same expiration date. And so it's like, okay, to me that makes sense because it's like you're lowering the risk because maybe it doesn't get up to that higher strike, but you're still bullish. And so Grok continues on, it's bullish, betting on a moderate rise in the stock price. Okay, cool. So you pay a net debit upfront because the lower strike call is pricier because it's a safer bet. So you pay that premium because it's a safer bet than the premium for the higher strike call. Because if price goes up really high, that's great. Both are good. But the higher strike is riskier because price may not go up that high. So you pay a little bit more in premium for the lower strike because it's safer. It's a safer bet. And so the max loss here is the net debit paid. So basically that premium and the difference in that premium. And the max gain is the difference between strikes. So that net debit times 100 because each contract represents 100 shares. And so they break even is the lower strike plus the net debit. And so right there, this is just a bunch of nitty gritty. I don't really necessarily need to get into that. And so basically the overall message here is that it limits risk and reward, making it cheaper than buying a single call. And so with his prior post, let's look at the data here because this makes a lot of sense to me. Just looking at the screenshot here. And so this, possibly related multi-leg trades, this spread is based on the $20 call that expires in 70 days on June 20th, monthly contract expiration, also the quarterly contract expiration, also the biannual contract expiration, the half-year mark. And so that's in 70 days. It's $20 strike. And if we do look over at the current price, the closing price from Friday, that's in the money. So that's a safe bet. All right. And then if we look at the other contract, that's the $28 call that also, because it's this spread, expires the same date, June 20th, 70 days from now. And so $28 strike, that's out of the money. So that's riskier. Okay, so let's just consider that. And so let's look here at the data. And so we do see these candles behind me, but generally you can see that the candles do go up higher here, but they look predominantly red. So that's more on the bid side. That suggests selling. And so what we can see is corresponding with these red candles, we can see these more predominantly green candles being very similar, timed similarly. And so it looks like what happened here is these $28 calls were sold to then buy these $20 calls. And so let's think about that. Okay, so right now, GameStop's price is below 28. So this is risky. It's above 20. So all contracts, they're all risky. But this is less risky. It lowers that risk. It also lowers the reward a little bit because of the difference in premium. So if we look at the difference in premium, we can see that for Friday, the data over here, it says the average fill was $3.61, which is times 100. So that's going to be $361 per contract. So maybe that's a lot of money. Maybe it's not a lot of money. It doesn't really matter what you think about it. This is relative to the other contract. So we look at the average for this contract. That's $7.47 times 100, $747. So it's basically double the price, a little over double the price per contract, but they're in the money. And so let's say these candle premiums, I don't have that highlighted, but the bid volume over here, the ask volume, let's see, the volume for the day, was, let's see, this candle over here, just move the cursor over, it's around 2,000 contracts, let's say. But with these other ones here, let's say it's a total of 5,000, because Roaring Kitty potentially likes buying in blocks of 5,000, as the Bronx Viking has pointed out. So looking at this, let's say that's 5,000 contracts there. And let's see, what is the point I was trying to make with that? I'm drawing a blank. This video is too long. Okay, so let's just think about that. That's okay, so 2 million in premium on the day. And so that's rolling. Okay, what I want to be talking about is $28 strike. So that's out of the money right now. Maybe it's not worth it to exercise those, because you could just buy the shares for $26.40. So that's cheaper than buying the shares at $28. So maybe you're not going to exercise the calls, okay? So that's something to think about. But then let's think about these June $20 strike calls. Would it be worth it to exercise those? Let's look at the current price, $26.40. Would I rather buy 100 shares at $26.40 or exercise these calls and get a fill at $20? So this is a much more appealing contract to exercise. And so that makes me think that this could be setting up for a gamma ramp or a gamma squeeze over the coming weeks, months. Because maybe these close in the money. I suspect they will. Maybe these do, maybe these don't. I don't know. No idea. But right now they're not. And so what happened last year is, I don't have it pulled up, unfortunately, but this rings a bell to me. It might ring a bell to you. But the June $20 strike calls. Actually, let's look this up on Reddit. And so let's look up some of his posts. What did he have here? June. Okay, yeah, this is super cool, guys. This is super cool. Right above Ed's head there. What do we see? $20 call, June 21st expiration. Sorry, I'm confused. $20 call for June 21st of 2024. We're getting a repeat. We're getting a Requel, guys. We're getting a Requel. Oh my gosh. Oh my gosh, I just realized this. Okay, so what was I talking about over here? June $20 call. What do we see though in the stock price? Did we see it go up to, massive levels on June 20th? So this is where, caution needs to come in. Okay, where was the price at June 20th? On June 20th, we got a closing price of $25.59. So it was above that, but it was below 28. So this spread that we're seeing makes a lot of sense. But so I think that this is really good to be keeping in mind, managing risk, that just because the expiration is June 20th doesn't mean we're going to see a massive move leading into June 20th. That's the expiration date. That's the date that this move is going to be expired. But leading up to it, we saw this massive move. This is May 14th, and then June 7th, we saw another spike getting up to a high of $48, being just below that gap fill. Again, a tease, just like we saw to the downside here. Very interesting stuff. Oh my gosh, this is so cool. I did not think I could get more excited about it, but I'm more excited about it. I think we're going to get a Requel, guys. I think we're going to get a Requel. So, yeah, because this just puts contracts, calls, they put leverage on market makers. They give retail leverage by saying, hey, I just have these calls, but I have the option to exercise them. This is 120,000 contracts. Add 2 zeros to that. That's, let's see, 12 million shares potentially if this was to be exercised. So that's pretty massive. So I think that we're going to get a Requel. Oh my gosh. Okay, and then so now I just wanted to talk about some of the net call and put premium here from Friday, and then go into some of the contracts that I am looking at and that were also mentioned by Unusual Whales, Bronx Viking, and Ryan Rigg. Okay, and so here, this is just the net call and put premium from Friday. And so what we can see in yellow is the stock price going up. We all are aware of that. We can see in green the net call premium going up. And then what we can see in red is the net put premium. That's more or less flat. So net call premium increased by $5.31 million, whereas net put premium only increased by $262,470. Okay, not very much, basically flat. We also see that volume increased here, so that suggests that this increase in net call premium, that was buying. So that's looking good. People are going long, and a special kitty might be going along too. And something that I've recently noticed about looking at whether it's call or put premium, the net call and put premium, what you want to see in charts like this, or I guess I should say what you don't necessarily want to see, is when you see gradual increases like this, that means that, small retailers like you and I are buying. We're going long, and there's no real significance in that because we're dumb money. We don't know what's going to happen. We're following the herd. We are the sheep. But when you get a roaring kitty involved, that is when you start to see, or whale, that is when you start to see spikes in the net call or put premium, whatever you're looking at. And so when you see a jump like this or a gap up, especially into a close on a Friday in the last 10 minutes, I believe. Let's see. Yeah, the last 10 minutes. So here where the cursor is, that's at 3:50 p.m., 10 minutes before the market closed. We see this spike in net call premium. So that's bullish and that's a whale. So that's following the roaring kitty, the wolf, whatever, not following the herd. This right here, that's following the herd, but it's backed by evidence that, there is some bigger money at play with a strategy. And so, yeah, just wanted to point that out. And then now I will dive into some of the contracts. And, so this chart here that we're looking at, this is going to be the volume of these contracts. And what we can see, so the candles represent the volume. And then the yellow is the premium for these contracts. And so I'm just going to look at the three that were mentioned by Unusual Whales Post. Oops, sorry, not that one. By Unusual Whales Post over here. So the $31, $32, and $33 calls for the May 16th expiration. So I'll be looking at those. And and so this is just the past 2 days. And so you can see over here, just the 2 days there. And so what we can see, the $31 call for May 16th, so about a month between now and expiration, we can see this pretty big candle. And that candle volume is about 5,000, maybe similar to what we saw last year, which was speculated that was Roaring Kitty doing these plays that he then rolled into shares or exercised them, whatever. I don't really know. But so 5,000 volume, and what we saw going from Thursday into Friday is on Thursday, starting the day, we saw an open interest of 823 contracts. But then we saw a volume on Thursday of over 10,000, which led to an increase in open interest of 7.7 thousand. And so that open interest basically 10x, went from 800 to over 8,000 open interest. And we also saw further volume of 6,000 contracts traded on Friday. Whether those were buying, selling, I don't really know. Here, it looks like it could be, kind of 50-50 based on the red and green displayed on the chart. Who really knows? But either way, open interest went from sub 1,000 to close to 10,000. So that is looking pretty good. And I should also note too that the premiums for these contracts the past couple days, the average fills was above $1. So 119 to 153, the averages the past couple days. So that would mean that to buy one contract, the average fill would have cost for one contract would have been, $119 to, $153 per contract because each contract represents 100 shares. Okay, and so that's pretty much all I wanted to cover with this contract. The other one here looks like a pretty similar chart, and actually another spike here. So that is pretty cool, I must say. And so what we saw here on Thursday, and this is the $32 call expiring in about a month. And so what we saw is about over 5,000 for this candle volume here. And so we saw an open interest moving into Thursday of about 634 contracts open. But then we saw a volume of over 10,000 contracts, which led to an increase of over 8,000 contracts and an open interest starting on Friday of over 8,000. So that's looking good. But then we also saw a volume of over 12,000 traded on Friday. Over here, we can see another candle volume of over 5,000. So maybe this is another Roaring Kitty buy, possibly, who knows? So that looks, pretty awesome. And yeah, and then from that, we just see this premium increasing. So as time goes on, the premium of these is getting more expensive. But this is, just another bullish looking chart over the past 2 days. And then if we look over at the $33 call that again expires in a month, we can also see another candle from Thursday the 10th of around 5,000 volume. And I should note that the premium for these candles, it's all about $500,000. This candle, $500,000. The candle over here, more than $500,000. And then the candle here for the $31 call, it's 600,000. Both the 31 and 32 are about 600,000, whereas the 33 is over $500,000, 554,000 around there. And so anyways, with that, and looking at the open interest from Thursday on the 10th, that was around 546 contracts open, but then we saw a volume of nearly 8,000, which led to an increase in open interest of about 6,578 increase, and then an open interest of over 7,000. Also, we saw a volume on Friday of over 9,500, over 9,600, and we did see this nice little spike here. It represents about $250,000 there. Premium did increase. And so I guess I should note, I think I mentioned this for the first one for 31. For 32, the average fill was, above 100, getting up to around 160, $1.60. So that's 160 per contract. If we look over at the $33 call, this is a little bit cheaper because it's further out of the money. So more risk, it's going to be cheaper. And so basically that premium, you're paying for a lower risk. If it's more risky, the premium is going to be lower. And so the high over here is around $1.40. The high from Friday was $1.46. I think that we could see a little bit of a pullback, just like what I was talking about with this move over here. I think that we could see a pullback in the stock price to around 24. And so that could be a really nice dip buying opportunity for any of these contracts. But, any of these contracts could close out of the money. They could go to zero. So it's good to have a plan for trading these contracts, for exiting them. Whereas shares, you can buy and hold. Who cares? Good to have a plan with that. And then so I was going to get on to this other contract, which is one I hold that's definitely more risky. But I wanted to pull up the, the $20 call. So, and let's see. I'm just going to search this here, GameStop, and then I'm going to search for the, June expiration, 69 days to expiration. That's some more good luck there, And then let's look at the strike of 20, because that's, the Roaring Kitty strike. And so let's add that to the list here. Oh my gosh. This is looking exciting. And so we didn't really see that much on Thursday. There was an open interest leading into Thursday of around 10,000, around 11,000 actually, and only 1,656 volume traded on Thursday. So nothing really that exceptional. And so what I might do here is shift this over to just 1 day, but then I might bring back the options volume over here, really just so I'm not blocking this data, behind me. And actually, with that being said, I could expand this. Let's see how, let's see. Anyways, I don't need to, oh, no, that would be for this. That's how I would expand this. We could look at all of this. For looking at a specific contract, we're just looking at it over here. Sorry, I was thinking about the premium. We want to look at the contract volume. And so what we can see for the 1 day 5-minute candles, we did see some buys at the beginning of the day, but we saw this, more exceptional buys at the end. If we look at the last 10 minutes, that looks a little bit cleaner of a picture. And so what we can see, open on Thursday, less than 11,000. Open interest opening on Friday the 11th. We saw less than 12,000, but then we saw a volume of 7,000, and we saw this big spike at the end of the day. This makes me think this is Roaring Kitty, coming back to this. Oh my gosh, this is a Requel. And so, wow, oh my gosh, I'm very excited about this. I think that we're going to see what happened last year. And with that being said, what I'm doing, and especially, this is not financial advice. The contract that I had been looking at, and I actually did some options theses earlier, I think, or towards the end of last year into January. And I started accumulating some $80 calls that expire in June, 69 days from now. Maybe that's some good luck. And the reason why I picked 80 is because when we had this move over here, the pre-market price, let's see, maybe I'll just scroll to it. This is a 4-hour time frame. Yeah, we saw a high of $80.07, I believe, during the pre-market. Maybe that was during the after hours on the 14th. No, that would have been on the 14th. So that would have been pre-market. And so $80.70. So that's why I picked that strike. But just like over here, it didn't close. Let's see, just fast forward to the future. That didn't expire above 80. It didn't close above 80. We didn't even see 80 on the daily chart here. So that's very risky, but I think that we could get a move up to 80 and then I'd, exit my position. And so my average now, I did just buy some more on Friday and I'm going to buy some more next week, not financial advice. And my plan for this, in all honesty, is just take a 20% swing, 20% profit. My average is around $1.11, I believe. I don't have a huge position, but I plan on stacking because, oh my gosh, what happened a year ago? That's happening again. We're getting a Requel. And so this is just cheaper for me. I'm a smaller time trader. And so, I bought 4 more of these contracts for 50, close to the low fill on Friday. And, I just want to get my average down, because I think we're going to see some big moves. And then if I get my average down enough, maybe I could up that 20% swing to 40%, maybe a 2x. I don't know. But this is the one that I'm in based on, what we see in the chart here, that I think price could go up to that level, but not close above that level. But considering that we're starting from a floor of 20 versus a floor of 10, I think that, if we see a high on the chart of 64.83, the high from May 14th, let's double that because the floor's doubled. So I think that we could definitely easily be getting into the triple digits. And so a double of 65, that's going to be 130. So I could see this going to 130 for a wick up, maybe 150 pre-market, and then a gap down. And then we find maybe 50 as the floor. This red uptrend, yeah, I'm actually going to adjust that to be green. I think that's going to be the new floor. Or maybe I should exercise a little bit of caution because we're not there yet. I'll make it yellow, a little bit of caution there. But yeah, I'm stoked about this. I'm stoked about discovering this while recording this video, so super cool there. I would strongly encourage to follow the Bronx Viking. I would strongly encourage to learn more about unusual whales. Follow them on X, and I don't get any benefit from you guys creating an account with them, but from what I have been learning from accounts like Bronx Viking, from Wolf of My Street, as well as Colin Gladman, I believe they do get kickbacks if you do use their links. So I would encourage you guys to check that out, and whether shares or contracts, I think that we're going to see a Requel, and I think that GameStop will be in the triple digits, let's say by the end of June, but it will have hit a high by the end of June. I don't know where it will be trading at by the end of June. So yeah, I'm super stoked about this. I think that, a pullback to 24 No panic there. That is going to be a great, great opportunity. So I'm super stoked. I hope that you guys are too. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to more videos like this. I'm so excited. I hope you guys are too, and I hope you're having a wonderful, wonderful weekend. Take care, and make sure you tune in for Ticker Request Live Sunday, 9 p.m. Eastern. I'll take some requests and maybe go over the chart and look over some overnight trading, what's going on with GameStop then. But yeah, take care of you guys. Have a great weekend. See you later.